The current market environment is particularly uncertain. When you talk about risks, we are focused on supply. If there's too much supply compared to the demand out there, that can put pressure on spreads. Secondly, the current M&A environment is very strong, but M&A can be and often is credit negative, whereby companies re-lever their balance sheets. So M&A is an area or a theme we're currently watching. And maybe finally, also bond market or interest rate volatility tends to be very well correlated with credit spreads. Currently, spreads in credit markets are very compressed. So higher beta, lower rated bonds have tightened dramatically. Within our relative value framework, we have a strong preference currently for senior bonds, which we deem to offer very strong relative value at the moment. Banks are actually the largest sector in our universe. Almost 30% of the entire investment-grade credit index consists of banks. That also means the sector offers a lot of relative value opportunities because you have different layers in the capital structure, you have different jurisdictions, interest rates have increased compared to 4 or 5 years ago, asset quality has improved, i.e. banks are firing on all cylinders. Right now in the US, there's a strong push for deregulation. Investment banking environment is very bullish. There's a lot of M&A going on. And usually that's what we think a more credit negative environment. At the same time in Europe, regulators have always been more conservative and more stringent. So they talk more about simplification rather than deregulation. We applaud that from a credit point of view. Hence, we like European banks a bit more over US banks at the moment. Finally, on UK banks, which is also under our coverage, they're a bit in between. Also, the regulatory environment for UK banks is focused a bit more towards the shareholder rather than bondholders. But also at the same time, the operating environment for UK banks is still very favorable.